Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
We're at a point now where $35 has become the line in the sand. If it goes over 35, you can't even imagine the hell that will break loose. And for our Monday rant, which got moved to Wednesday, but today, because of travel issues, is back on Monday, we've got Ranting Andy Hoffman. Andy, what's going on?
Well, you hit it right on the head. I mean, there's no major news stories from this weekend unless pending World War III is considered a major news story these days.
That's in the comics, man, or in the tabloids. You know, it's like Men in Black. If you want the real news, you better go buy the Inquirer, because you sure aren't going to get it from any of the rags trying to pass themselves out as all the news that's fit to print.
Yeah, I mean, look, we do have this election coming in 6 weeks, and given the amount of market manipulation we've seen across the entire last 12 months, starting literally last September when gold hit its all-time high, it's just difficult for me to believe, outside of a major black swan event, that they won't be able to keep markets in a position for the elections to go Obama's way. That's the key. And so, you know, here we are, and as we're going to be talking about, silver at $35 and gold at $17.90 are the two levels they are defending to the death.
Yeah, so we saw that on Friday. Silver just popped over $35, and immediately, boom, 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 they take it down.
Yeah, we've seen it actually. It was 3 or 4 times last week, and you know, they have, you mentioned lines in the sand. I'm going to take credit for that proprietary term because
you can, you're entitled.
Because I do have it in writing only about 100 times. And it's because I've been watching for 10 years. This is what they do. They retreat to a higher level, and then they hold the line until they deem that they can't hold it anymore. And we've seen all summer, I call these summer 2012 lines in the sand. For gold, it was, was it 1635 or 1640? And for silver, it was 2750. And then, you know, sure enough, the forces in the bubbling teapot burst. And here we are. And I saw several lines in the sand get taken out in a matter of days and weeks. So 35 has become the new one for silver. And for gold, it's 1790 for real reasons. Look, 35 is a very key round number. Once you get to the upper 30s, people start to see 40, and then you think about this ultimate quadruple top breakout I've been talking about. And with gold, remember in December of last year, gold got to its all-time high in September, and then it came all the way roaring back to 1790 when on December 8th, when the cartel put out that fake headline that said that the Fed and BIS and BOE were selling gold at 1790. Which happened to be the day that the ECB lowered interest rates. It was right after they lowered interest rates. And then again, it got smashed down to 1500 second time. Then it went right back up again. And in February, gold got to 1790 again when they pulled the leap day violation. So here we are again, back up to 1790. And sure enough, as you say, silver gets this 80 cent per share per ounce smash right on Friday afternoon, right after it breaks above 35 for perhaps the 4th time last week, and gold at 1790. And then, of course, they do. If you look at the overnight chart, you'll see they literally took silver down 70 cents, I would say, in a matter of seconds. It looks like the Sunday night silver massacre. And here we are back at $34, and gold is 1765. It's Sinclair's Angel, getting ready to break out again, because it will.
Yeah. So
and by the way, since the euro is down sharply today, guess what? Euro gold is up again, and it's only 0.5% from its all-time high.
Yeah, and you know what I've noticed also is that they do these raids now, and they fade very quickly, sometimes in a matter of minutes, other times in a matter of hours, and then you get really bullish upside reversals.
They are all over this. And actually, as we talk, it's the Comex is about to close. There's a few minutes left. I mean, silver was down 30 cents before. Then all of a sudden, a minute later, it's down 50. Then just as we picked up the call, it was down 40 cents. And I look up, it's down 56 cents. The Dow literally has been minus 25 for the past 3 hours. They are so intent on holding this Dow in front of the election and on keeping this breakout in silver from happening. We can talk in shortly about the Comex short interest and the derivatives. This is a major, major, major level, this $35 in so many different ways.
Hey, you know what this reminds me of? There was a story like one day FDR, when he was manipulating gold, said, make the price go down 20 cents an ounce. So they did it, however they went about doing it. And nothing, absolutely nothing happened. The economy didn't get better. The world didn't blow up. Zero happened, which made him come to the conclusion, it doesn't matter what I do to the price of gold, the economy is still going to be down the tubes.
Yeah, well, he got into office in the middle of the Great Depression. I mean, but at that point, it's like right now. I mean, you could do all you want with the price of gold or the price of the Dow, and the economies of the world will still get worse. In fact, I mean, yeah, I'll bring up the Dow from time to time just to show you, like today, that for some reason the whole world was down, but they wouldn't let it go down more than 25 points. But I'm going to discontinue writing about it regularly because I've made my point about what they do with the Dow. It's just as rigged as anything else I've ever seen. And what's the point? The economy gets worse everywhere, no matter what the Dow is.
Right. And what about those short interest numbers off the Comex?
Yeah, I've been keeping a log of the Comex, commercial shorts for as long as I've been in this market for 10 years. I have a spreadsheet, so I watch every week. And since we've had this big surge in gold and silver in the past, I guess it's a month now. It's really only maybe 6 weeks or so. Since we've had that, as usual, of course, the commercials are massively increasing shorts. In fact, the silver short had gotten down to 12,000 contracts in the middle of the summer, which was the lowest it's been in 15 years. And now it's 52,000 or 51,000 contracts. That's how crazy these guys have gone. And in fact, for gold, the level of the short interest has also been rising for the commercials. It's reached the level from literally the week before the leap day violation. But for silver, it's reached the level from literally the week before the silver price massacre at $50 an ounce. Now think about that they are so terrified of a breakout right here, just above into the high 30s, that they have shorted as much silver as they did going into silver about to break $50 an ounce 18 months ago. I mean, that's a pretty scary statistic of how desperate they are. And I don't believe that there's any chance they're going to be able to do that again, no matter how much they try these little things here.
Yeah. So they're losing a bit of control and the ability to affect perceptions and reality.
Yeah, and the open interest is much lower on all these exchanges than they were years ago, because less and less people are playing in the paper sandbox. I mean, there's still, pardon me if you're a trader listening to this, there's still idiots who buy long contracts in the Comex futures because there's about 10 million ways you lose your money, starting with these overnight hits. I mean, if you look at the overnight chart of silver, we're talking about 70 cents in a matter of, I'd say, 30 seconds. You lose it that way. They'll take it from you like MF Global. They'll change margin requirements. I mean, they'll give you the bunk. People ask me all the time, why doesn't someone just take out the inventory like a billionaire or Eric Sprott? Because I don't believe that the stuff is even there. And two, who wants the bunker hunt treatment? Because that's what they'll do if someone came in and tried to buy it.
Yeah. Yeah, that's what'll happen. All of a sudden, sorry, we're closed for lunch, and they'll just send the trucks away.
Yeah, absolutely. So look, I'm not trying to tell anyone that I'm worried about some big silver price massacre simply because they're doing this. I'm trying to alert them that open interest is down, meaning that there's less real traders in the market right now and more government traders. And on top of that, those government traders are taking even more intense, concentrated short positions in paper because of the desperation out there. And, you ask any bullion dealer out there, including Miles Franklin, about demand, it's picked up enormously since the middle of August. Yeah. So they are fighting a real storm of physical demand. And believe me, that $35, you look at the last week, I mean, they are terrified of that level. And I went to bed on Saturday night, getting ready for Sunday, saying I will bet my entire fortune that Sunday night will have a new Sunday night sentiment attack because they are desperately trying to turn things around before this election.
Yeah, it certainly seems that way, and it's kind of Humpty Dumpty because they're just not doing it.
Yeah,
So
I mean, they got a little damage done today. And, as we speak now, I see they have the Dow gold algorithms on, whereas the Dow fell from -25 to -35. So silver falls 10 cents and gold falls $2. I mean, this is what they do, but it's not going to last because the physical is not going to go away. And the only chance they'd even have to try to get a real paper smash was if they tried to is if they let their precious Dow Jones propaganda average go, and they're not going to do that. They will never let that thing go.
right. So the Dow's become an irrelevant measure, is what you're saying then, huh?
It's so irrelevant that I'm going to stop talking about it.
Yeah.
Just like I stopped talking about the dollar index years ago. It used to be we talk all the time. Well, what's the level of the dollar index? And it went up a tiny bit, so gold's going to go down. It's been proven now that the dollar index it's been around 80 for the last 7 years. Meanwhile,
Yeah.
gold has gone up from 500 to 1800. It's irrelevant. The only thing that's relevant about it is the fact that the euro is that the cartel cannot hold down gold in euros and in dollars simultaneously. And that's why today, even with gold down 10 or 12 bucks, the gold in euros is barely changed.
Yeah. And hey, I read an article, I think it was in Zero Hedge, about what's really going on in China, and they're having these bridge collapses take place, like a few a month. All these brand new, beautiful bridges they built are falling down. And I remember when I was there 15 years ago, I looked at the quality of the highway construction, and it was abysmal. I mean, nothing lined up. And I'm saying, this stuff is not going to stay up. How are they? And they're going to have such traffic on it. Now it's happening. It's kind of an allegory for the Chinese economy and many of the products that they kind of sell around the world.
Yeah, well, look, China is still just a communist country, no matter how everyone likes to hype them up as this genius engine of the world. I mean, yeah, they have the manufacturing market share, but again, manufacturing is a commodity business. They just happen to have cheaper wages. And right now, people aren't manufacturing things anymore. There's less demand. So, they have 1.5 billion people to feed, and those people are not going to be able to spend time fixing stupid broken bridges because there's not going to be money to pay for them to do it.
Yeah, it's just freaky. We live on illusions, and one of the illusions was the China miracle. And everybody forgets that, in a control economy, centrally planned economy, the price mechanism is not allowed to function. And if you don't have a valid price mechanism functioning as the ultimate allocator of resources, you will have misallocation, you will have malinvestment, and you will eventually have collapse. Exactly what happened in the Soviet Union and so many other countries, exactly what's happening in the United States now. So unless markets are allowed to function, is my point, and I'm sorry if I got to it in a rather roundabout way, just like financial markets, unless price is allowed to function, you just have an awful mess. You have economic collapse, and eventually you have depression.
Right. And of course, the prices are not allowed to function anything except Apple.
Yeah.
And God forbid it's down 2% today because it didn't sell enough iPhones in 2 days. But I call Apple the surrogate PPT because the Nasdaq is up. What do I have it right here? 20 something percent, 22% or 21% this year. 17% of that comes from Apple.
Yeah.
I mean, that's how much of a force it's become in the Nasdaq. The rest of it has done nothing. It's really Apple that has made. In fact, Apple's in the S&P too. It probably is a considerable portion of the S&P's movement.
What's really funny about it all?
Yeah.
It's that Steve Jobs didn't give a damn about the share price. He didn't care about any of that. He never did anything to maximize the share price, like declaring a dividend or anything else. He ignored the markets. and a couple of other companies that I've dealt with over the years, the only information that you see on their website about the company is what they actually have to file at the SEC. They have nothing else. And, all the guy did was make products that he thought were cool, that the rest of the world eventually came around to seeing, but he had no interest in financial alchemy at all. And the proof was when he died, he had like $8.5 billion worth of stock that, it was in Disney, from the Pixar. It wasn't like a real diversified or anything portfolio. It meant nothing to the guy. And maybe that is the right thing. Like Henry Ford, he hated Wall Street, hated dealing with these financial superstars. And in the final analysis, you see that he was right.
Right. Well, of course, there aren't that many Henry Fords and Steve Jobs out there. But look, I was a Wall Street analyst 15, 20 years. I mean, that's why I left myself. The industry has been tainted by the financial alchemy, as you say. And look, I spent the last 5 years before Miles Franklin with junior mining companies trying to get financing. And the banks have literally destroyed half the industries in America with their financing techniques and gimmicks and hype, and getting managements to believe that that's what you have to care about is the stock price. And it's just one more reason why America has devolved from what was once a great industrial power to a paper tiger.
Yep. And the enthusiasm for the markets just continues to decline. And like you said, the individual's gone. He's not coming back. And it's just a bunch of boys on Wall Street flipping out algorithms at each other, just making things go up. And then eventually, when they're tired of that, they make them come down. And that's what we're going to see. But they can't control physical metal in the final analysis. And that is the average person's last vestige. And just to tell you, I was at the Chicago Resource Hard Asset Chicago conference, and First Majestic, a company that I like that's really done well, they actually sell their silver retail at these shows. So I was able to buy a few ounces at $35, which silver at the time was $34.50. Of course, now 2 days later, I'm a dummy because I could have gotten it cheaper. But the point was, no spread, no nothing. You buy a couple ounces just to say you bought it, and that's it.
Yeah. Well, I mean, First Majestic is one of the few mining outfits that was a junior that actually turned into a real producer, and good for them. But along the way, even that stock has been a difficult one to all the ups and downs, and people just need to be extremely, extremely careful when you're dealing with investments of any kind, whether it's mining investments or otherwise, because like you said, it's just algorithms running back and forth with an agenda. If they want to crash the market to get this, they'll do it. If they want it to soar, then they'll do that too. There is no way, shape, or form you're going to outsmart or outtime any of these paper markets. Because look, there's a great chart. I'll finish with it. There's a great chart I put in my rant that's coming out this afternoon, and it was on Zero Hedge. It showed the correlation between the S&P 500 and what they called economic surprises, meaning if there's good surprises, the chart goes up, and if it's bad, it goes down. And you look for the last like 5 or 10 years, it's a perfect correlation. When the economy improves, when you have better than expected numbers, the S&P goes up, and vice versa. But starting, I think it was in the last few years, all of a sudden, the S&P just goes straight up, and the economic data goes straight down. And my point is, you're not going to be able to analyze anything. You are just going to have to guess.
Hey, you called it. If that is not proof of a complete and total rig job in the economy, then nothing is, because the market was always predicted, or I guess was a leading indicator of the economy. Now it is completely detached, and it just shows that there's no longer a market. As Chris Powell said, there's just interventions.
Correct.
So on that note, Andy, we will catch you next week. We've got some moving stuff going on, but we'll connect. And man, it's never dull, huh?
Nope. Have a good one. We'll talk next week.
You too. Be well.
too.